I know you like the returns that you are getting from your money market fund. You have fallen in love with money market funds. You understand about the fund manager. You know about treasury bills. And lately, you have gone over the roof about the infrastructure bonds. When you buy that bond or that treasury bill from the central bank, in effect, the central bank has sold that financial asset to you. Now, when we have a buyer and seller, that is an environment that we call a market. You know terms, difficult terms, new terms, like a portfolio. A portfolio is just a group or a combination of assets, both financial assets and physical assets. So when you talk of that bond that you're holding, a treasury bill, what sits in your money market fund, maybe a plot somewhere, that collection, that is your portfolio. Even one bond, that is a portfolio. It's just a collection of your assets, which can have classification or further groupings within it, that these are financial assets, these are another group of physical assets, and that one we call it portfolio classes. You have learned about coupon, which is a technical word that refers to interest. Now, in this video, I want us to bridge the information gap. I want us to grasp an understanding of the financial markets, capital markets, money markets, forex markets. I want us to look into the classification of the financial markets and understand these places where either we buy directly these financial instruments, shares, which are also known as common stocks, equities, ownerships, bonds, which are debt instruments, and we have currency exchange. When you exchanged your Kenyan currency to a dollar, or a dollar back to a Kenyan currency or any other currency, that is a market, the forex market. We shall delve into that classification and understanding of the financial markets after 3 seconds break. Don't go away. Subscribe to this channel if you are new. Share this video to another person, perhaps in your Facebook, it could be your WhatsApp group, or in any other platform. I will be back after 3 seconds. Welcome back, and thank you for staying on. We begin by looking at a market. And simply, a market is a place, whether physical or digital, where we find buyers and sellers. Therefore, when we talk of capital, and capital in essence refers to resources, if not to say money, that is needed by businesses or companies for their operations or their investment. And in return, they will either pay interest if it was borrowed resources, or they will pay dividends in case of they sold a part of the business to the new investor. Therefore, when we combine the two terms to form the word capital market, a capital market refers to a place or an environment where we will get buyers and sellers of financial assets. That brings us to a third word to define what are financial assets. And financial assets are items of value, that is, assets that are in monetary terms or denominated in cash. And this refers to items of value such as bonds, bills, treasury notes, shares. Therefore, when we talk of a capital market, we are referring to an environment where those instruments are traded. Capital markets are also known as financial markets. And for better classification, we will use the word financial market, where now it becomes clearer that a financial market is a place where we will find buyers and sellers of financial assets. So with that, we now further classify the financial market or divide it into three. We will have a money market, we have the capital market, and we have the forex market. So what is a money market? And the money market becomes a place where we will find buyers and sellers of financial assets which have a maturity period, an horizon, or a maximum tenure of 1 year. These are instruments that mature in a period that is not more than 1 year. A good example is treasury bills, where treasury bills, these are short-term bonds issued by a government. Treasury bills are further divided into three, and they all fit within that description because either of the three, they mature within a period of 1 year. You can have a treasury bill that matures in 91 days, another type matures in 181 days, and a third type matures in 365 days. That is 1 year, half year, and 3 months or a quarter a year. We have other types of short-term instruments such as commercial papers. And a commercial paper is the same as a treasury bill in that the commercial paper is issued by commercial institutions or corporations or companies. A short-term bond that is issued by the government, we are calling it a treasury bill. A short-term bond issued by a corporate or a company, we call it a commercial paper. Then we have others like bank deposits. At this point now, I want to bring you to perspective of a money market fund. And now that you know, a fund is an amount of money that has been created over time. But in this case of money market fund, it comes from different people and it is managed by a professional known as the fund manager. A money market fund, we call it a money market fund. Remember, fund, we are saying it's a pool of money. This money is dedicated to be invested in short-term securities, instruments that mature in 1 year. Therefore, those securities are only found in the money market. And for that reason, that is where the fund draws its name, a money market fund. A fund that is dedicated for investment in the money market. And that one drives me to other types of funds. We have a fixed income fund, which is a pool of money dedicated to be invested in fixed income securities. We have a bond fund. That one is dedicated to be invested in bonds. We have equity fund, which is dedicated to be invested in equities or stocks. We have a blended fund that combines both bonds and equities, known as a balanced fund. Now, we have identified the money market to be the part of financial market that deals with short-term securities. Then now we look at the part that deals with long-term instruments, financial assets that mature in more than 1 year. And that is now where we talk of the capital market. So the word capital market, which is a part of a financial market, that is a segment that is dedicated into buying and selling of bonds and shares. Remember, we have said that bonds are IOU papers or debt instruments issued either by the government or by corporates. But in that, we have reserved the one to be issued by the government is a treasury bond, while it is issued by corporates, it remains as commercial papers. So at this point now, you understand that capital market is the segment of financial market that deals with buying and selling of long-term financial assets. Then the one segment that is dealing with short-term instruments is the money market. Then the third segment is the Forex market. And the Forex market deals with the buying and selling of currencies. That is where we do the exchange. You have your local currency, you have your Kenya shillings, and you want to buy the currency of another country. You have currencies of other country which you want to convert back into a local currency. That point where you go for that exchange, that is a dealer in the Forex market. This is not withstanding the fact that we have other segments of markets that are outside that legal structure or this structure. We even have others that sit in the black market. Personal arrangements. So we have the venture capitalists and what have you. Those are arrangements that are not as structures. Whatever we have given out is what is commonly and formally traded. A good example is the Nairobi Stock Exchange. The Nairobi, when you talk of the capital market, is just part of that market that is dealing with long-term securities. We have the part that is dealing with the short-term securities, which you are calling the money market. Now, we have to look at another broader classification of the financial market or the capital markets. And this is when we are talking of the primary market and the secondary market. And the primary market is the market that reads off, or the market that does not involve middlemen. It defines a relationship between the seller and the buyer. And the good example is a company IPO or a reopened government bond. This is a point where the investor purchases direct from the issuer. When you buy as an individual a bond from the central bank directly without involving a middle person, you are in the primary market. But I'm not saying that in the primary market you cannot engage the service of a broker, the service of a middleman. It's allowed through a nominee account. Then, once the instruments are traded in the primary market, they are immediately after the auction period or the issue dates, the value dates, they are now transferred into the secondary market. Where in the secondary market, that is where we are doing scenario buying and selling of the instruments between investors and brokers. We have to engage the services of brokers in the secondary market. But with the invention of the DAO CSD for purposes of trading in the government securities, that one you can also do it directly by yourself. But initially you buy from the primary market, but the trading shall happen in the secondary market. Thank you for watching the video. I hope now we are clear with what financial markets are, what the capital markets are, the money markets, and the Forex market. Thank you for watching.